Hi folks, ready to kickstart 2022? Make sure you've got your trading strategy in check. It's an exciting new year and there's no better time to start your trading journey than right now. Okay, hold on, maybe not at this minute. I see so many comments asking how do you start trading, and I often wonder if you've taken the time to think out a trading strategy that suits you before diving in. It can be so exciting once you've taken that step to start your financial journey, but so many of us, including myself, get burned when first starting out. I've had to learn through trial and error what trading style suited me, and I'm here to share what I've learned with you. Keep watching as I go through questions you need to ask yourself so you can find out how to work out a personalized trading strategy, and also a big tip that you want to take as soon as you're done watching this video. Firstly, you need to understand what kind of trader you are. That's right, there are different kinds that suit everyone that help you build out a perfect strategy that best suits you. So let's ask ourselves some important questions. Realistically, how much time do you have to dedicate to this? Is it 4 hours a day, week, month? You may need to try it out for a bit to see where you naturally fall and then work out on a strategy that suits that. The time you dedicate should reflect your goals and determination. What does risk mean to you? We all know trading is risky, but we need to be smart about this. Bills come first. You may only be able to afford a $10 account, but will this sustain you in the long run? Have a look at all the account offerings and what you're able to get with the funds you trade with. What are your spending habits? Are you a super saver? Do you like to splurge? Your money habits can tell you so much about what type of trader you are. What's your personality? Do you consider yourself an impulsive person or slow and steady? You need to have a hard look at yourself and make trading decisions on what your risk to reward ratio is. I recommend you keep a trading journal. Make sure you're trying out what you are and not comfortable with. What are you trying to achieve with your trading? Are you looking for the fast wins through the day, or are you in for the long-term positions? You can't start trading without knowing your goals, just like you wouldn't go on a road trip without knowing your destination. Now that we know what questions we have to think about, let's dive into the types of trading strategies based on timeframes. If you like to live life on the fast lane, enjoy action, excitement, and rapid market moves, then scalping may be for you. Scalpers are short-term traders focusing on holding positions for timeframes as small as a few seconds to a few minutes. Folks, scalping strategies involve trading frequently throughout the day with the intention of achieving small gains on market movements. Next, we have day trading. This requires a lot more time dedicated into watching the screen all day for juicy opportunities. See this as time consumers watching a baby or a puppy all day. It needs your full-time attention, placing frequent trades through the trading day, holding on but making sure they close positions before the markets and puppies go to sleep. Let's now think more zen. If you're cool, collective, and calculative, then you might be swinging in those trades. Swing traders will hold on to positions for longer than a day, even a week. Swing trading combines fundamental and technical analysis in order to catch momentous price movements while avoiding idle times. And finally, for those who love to hold, it's time to discuss the position trader. As the longest holding period among trading strategies, position traders are less interested in an asset's short-term price fluctuations. Their key focus is with the performance over a longer period. You need to have a strong knowledge of fundamental factors, lots of patience, and good risk management to get this strategy right. Now that we've got the 4 time frame based strategies out of the way, let's talk about what kind of analyst you are based on your personality. If you are inquisitive, curious, and forward-thinking, fundamental analysis could come naturally. This means you can often process new information quickly and predict how an event can impact your next trade. Using fundamentals can help you reap the benefits from spikes caused by political or economical events such as non-farm payrolls, GDP, employment figures, and elections. If you've got the skills to read charts and spot trend forming, and love to research historical price data using indicators, then you are a born technical analyst. This type of analysis makes use of the past history of a market's price movement and then uses these clues to interpret and try to predict the next move in the market. Saying this, making sure you have a bit of both fundamentals and technicals in your strategy is best of all. This will allow you to have the big picture, analyzing the markets from every angle and giving you a clear view of potential market entry and exit points. Remember guys, selecting a trading strategy does not have to be complicated and you're not just bound by one. While we all have our own unique personality traits, the most successful traders are able to adopt and change their strategy depending on market conditions. So there's nothing wrong with learning about each strategy to become more adaptable to each situation. If one strategy does not go your way, don't give up. Trading is a numbers game, with the most successful traders adopting patience and implementing the right psychology and mindset. I hope this has helped you navigate which trading strategy best suits you. Are you a scalper or day trader or any of the above? Let us know what trading strategy suits you and why. Thanks for watching. Please remember to like, share and subscribe. Until next time.